Um, Satin Credit Network, then. We've got the management joining in, and we're going to be speaking about fundraising. We're going to talk about the impact of the RBI's latest norms on the prompt corrective action framework for NBFCs. Will the headline NPA numbers continue to rise, and the prospects for growth? HP Singh, who is the chairman and managing director, is joining in. Thank you so much, Mr. Singh, for taking the time. As I understand it, the company is eyeing 15 to 20% AUM growth in FY23, and that seems to be quite, ambitious given the context of the disruption that we've seen in the recent past. The board has also approved a raising of funds of 225 crore rupees. Could you help us understand where this growth is going to come from? How is this going to work?
The whole idea of doing a preferential allotment of 225 crores is basically raising the growth capital for the growth which is going to come in the couple of years, which are going to follow from whatever has happened in the COVID pandemic as such, because we are seeing a lot of pent-up growth coming up in the areas where we operate. And we feel once the whole crisis of the pandemic dies down, which is practically dying down in terms of the collection efficiencies and the disbursement picking up, we feel that a 15 to 20% growth in FY23 is achievable, and that is what we are trying to look at. In terms of where we are going to really expand to, the geographies where we are in there in about 23 states. So we feel that going to do a deep dive into all these geographies where we operate. And on that basis, I think, achieving a growth of about 15 to 20% is going to be fairly easy.
In conversations that we've had in the recent past, you maintained that the focus is also going to be on asset quality. And I guess that it's a balancing act in terms of aggressive growth and managing the quality of the book. The regulators also come in and said that NBFCs have to be careful in terms of the lending that they have, and regulations have changed. Is that going to cause your headline NPA number to rise, at least in the short term?
Well, I don't really think so, no, because, as NBFCs, what we follow is the Ind AS basis of accounting. Now, because of the Ind AS basis of accounting, I think the way we actually make provisions in terms of the GNPAs and the NPAs are fairly robust and fairly high as compared to the normal course of GAAP accounting, which we used to do earlier. So our thought process is that in terms of the circular which has come in from RBI, there will not be a uptick in terms of NPA. Whatever there is regular NPA that will be there. The provisioning has been pretty good because of the ECL norms. And our bet is that as we focus on portfolio quality, since we've been able to focus during the last couple of years because of the COVID pandemic, as well as the series of lockdowns which have happened, I think the collection efficiencies, which is getting maintained now as per the pre-COVID level, I think that hold through. So the NPLs will not have a rise, and that's what we feel that how it is going to go forward.
Us a little bit more about the collection efficiency, because I think a lot of your investors will be keen to find that out. In terms of the prospects for microfinance, that's always been bright, but that took a bit of a stumble during the pandemic because of the disruption that you saw. So how are things standing right now?
See, whenever a disruption like this happens, where you're not able to actually, this is a high-touch business, where you have to regularly meet the customer in terms of getting your collections into the system. Once the lockdowns get over and once all these restrictions go away, the collection efficiency jumps back to the usual normal, which is there before, like the pre-COVID days as such. So for us, only if there is a series of lockdowns or there are restrictions in terms of when we are not able to hold the center meeting of the borrowers, I think that is the only time when the collection efficiency really goes down. But since all that is over, the last lockdowns happened sometime in April, May this year. And post that, I think the collection efficiencies have been rising, and they are coming back to the pre-COVID levels now, I think, going forward. So that's how we are really looking at it. And there's a lot of pent-up demand which is coming in from the rural markets, which is also driving this collection efficiencies as well as the disbursements which are going on.
Sure. Mr. Singh, what I also wanted to understand was whether or not demand is actually translating to disbursements, and if you could also give us a geographical breakup of as to where you're seeing the strongest momentum as of now.
See, for us, demand is widespread. Since we are diversified as a player for microfinance, we are there in 23 states. So the demand is not that it is coming up in clusters of various states; it is coming all across. So what we are now trying to focus upon is that if we are able to take a far most deep dive measures into the geographies where we are, the demand will come up. The other factor is that as the economy starts getting back on track, even the rural economy, the demand which has been there, which was pent up, technically for the last few couple of months, I think that is slightly coming up now, and that. Barring the festival season and the way it is probably going on, I think it will probably have an effect where it will rise now for us, And in fact, Q4 seems to be a good quarter for us, really looking forward to it.
Interesting. I also wanted to understand what really are the growth prospects that you foresee in the non-MFI segment, considering that you've guided that you aim to increase your non-MFI portfolio as well. Throw some color on this as to exactly what is the plan and what gives you this confidence.
So for us, why we are so confident about our non-MFI book is both on the MSME as well as the housing front is since we have a captive customer base of about 30 lakh customers, the customers are all graduated microfinance customers, and these customers have gone through their second or the third or the fourth cycle. For them to now aspire for a higher ticket size loan through the MSME route, as well as if somebody needs housing, finance for the rural market, which is technically been a market which has not been looked at by the other housing finance players, gives us that impetus that we'll be able to really have a good growth in our non-MFI sector, which is going to be secured through the MSME as well as through the housing segment. And we are fairly confident for a graduated microfinance borrowers who has actually done 2 or 3 cycles for us, will be able to graduate and take a higher ticket size MSME loan as well as a housing loan for us. That's the reason why we feel that there will be a lot of disbursements which will happen in our both non-MFI subsidiaries of ours.
Okay. I also wanted to understand, the merger of the 2 wholly owned subsidiaries, that's Taraashna Financial Services with Satin Finserv. We understand that the expected timeline is by March end. What could be the possible synergies which could arrive out of the same?
So what we had done to make this happen is that Taraashna was a VC subsidiary of ours, which used to actually do microfinance acquisition and sourcing for the partner banks, But it was not an NBFC. So for us, the first play was that we were able to effectively leverage our capital for Satin Finance as well as Satin Finserv as well as for Taraashna if we merge both the entities. So that's one of the key reasons that we'll be able to effectively leverage our capital from Satin Finserv once Taraashna gets merged with Satin Finserv. The other is that once we have an NBFC which even houses the VC part, we will be able to really look at even doing something from our books. We were doing MSME lending, but if you want to do any other asset class, technically besides just being an MSME, we do have a unit or maybe a subsidy which can probably take care of that. But the effective way where we really want to do it, that we could effectively leverage the capital of both Taraashna as well as Satin Finserv once it gets merged over there and leverage that to increase our book and increase our disbursements from there.
Okay. Mr. Singh, great to have you on the show. Thank you so much for taking the time out and speaking with us today.